Hello, and welcome to another episode of The Delta, a podcast about how blockchain and technology is changing our financial environment and discussing its impact on society. My name is Rustin Cavell. I'm the CEO and co founder of Coast. Along with me today is my co founder, Dan Durning, and Eric Tomaszewski. Eric is a financial advisor with Verde Capital Management. Prior to advising clients, he was an equities trader and analyst. He's been advising clients for over a decade and has recently expanded his thesis to be inclusive of cryptocurrencies. So we're excited to chat with you today, Eric, and thank you for being here.
Thank you so much for having me.
Absolutely. We've had the pleasure of speaking on a number of occasions and love your insights and love, I guess, how curious you've been within the blockchain space. It's kind of rare to see people who are registered investment advisors who are early adopters of this technology and including cryptocurrencies within an investment thesis. And so maybe just to get us started, can you tell us a little bit about yourself, a little bit about your career trajectory and how you got into digital assets?
Okay. Yeah, I can, of course. Again, thank you for having me. Disclosure time. Any statements or opinions shared today are my own and do not represent Verde Capital Management or my fellow team members. Beyond that, as you said, at a high level, we are financial advisors. We're a boutique advisory firm that, in essence, manages wealth for people of all walks of life. As of right now, we have an excess of $500 million in assets. And we are an RIA, a registered investment advisor, or we also go by the name of a fiduciary, with the intent of working with clients in their best interests. Our mission, I think, is pretty simple. It's let's tie money and tokens to life fulfillment. And we do that by educating people about their money, guiding them to make more informed decisions, and helping them grow in all aspects of their life. So there's the 10,000 foot view. With my progression of advising, this, I would say, takes me back to college and internships. I had the ability to really see our industry from many different perspectives. I had the ability to work on the discounted brokerage side and see what that sort of looks like with client interactions and what's done, to looking at things from the full service brokerage side with firms like Merrill Lynch, and then having the full spectrum of being able to see a pure RIA firm, the firm that I'm with now that doesn't have any brokerage affiliations. So that progression has been incredible, but a lot of that comes back to some of my initial internships where I wanted to really get myself exposed to everything. It's sort of how my mind works. If I don't know enough about something, I'm going to dive 10,000 feet in and make sure that I immerse myself, which is also a good way to describe my journey within cryptocurrency. So that's how it started. And how it's going is I sort of realized that there were these certain things that I never wanted to be unknown. As an example, being an RIA is a unique experience. Let me take a step back so this sort of comes around full circle. If you look at the road of financial services, it's a little bit complex, but to break it down, you could take a path in two different directions. You can either be a broker, or let's call it an insurance person, which is about 90% of our industry, most of what you see, or you can be that other 10% that works as a fiduciary or a registered investment advisor, someone who's tasked with working in your best interest. Why it's important is that I was within the world of financial services and some of these things weren't as apparent to me, and I was in the industry. So it shows you that if people within the industry don't know about all these different nuances of financial services, how could it ever be really addressed with the normal consumer? So as I took this progression, had all these different experiences, it was a realization of what kind of advisor do I want to be? And frankly, I wanted to have to adhere to the highest standard within financial services legally, by the rule books, and also give clients no doubt of, am I working for them or am I working for my pocket? And that progression and experiences really catapulted the last decade plus of me working with Verde Capital, and it's been a great journey.
So then at what point did crypto hit your radar? And at what point did you start to take it seriously enough to consider adding it to certain clients' investment portfolios?
Yeah. So crypto hit the radar early on. So if you look at like 2013, 2014, 2015, it was in the media. There was attention. We were fully aware of these things, even probably going back even prior to that. But to a degree, some of it was a little discounted. partly because of the things that were taking place, like the Silk Road issues, Mount Gox, and as a fiduciary, leaning into that world was a massive risk. So we watched from afar. What was a big catalyst for me personally and even our firm, two different things. You had Bitcoin futures come to market. It was the acknowledgement of the traditional finance world that basically showed that institutions were curious, that there was a bigger market at play here. Um, that gives advisors just naturally more comfort to be able to even consider diving in. That was one big catalyst. Another one that happened, frankly, in advance of that was in 2016. We had a client meeting, and a client came in and said, "Hey, Eric, I typically give you things to research, and then you give me your assessment. I have something for you to research." I came across this thing called blockchain technology and this specific project called Ethereum. I don't know enough about it, but can you dive in and tell me what you think? I was tasked with that research. I dove in, and I spent another hour, then another hour, and I dove in that whole night, and then the next day, and I had that holy crap moment where I had the realization of, why are more people not speaking about this? This is huge. This is very significant. Why is no one else yelling from the rafters that this is such a big deal? That was my aha moment, and then from there, that sort of created a world where internally we had much more of a deliberate conversation about getting access to that world through some of the obvious mechanisms like the trusts from Grayscale, which were very early on. And then from there, progressing into getting more direct access, let it be through centralized exchanges for certain clients or through separately managed account formats, and then also going even more directly to being able to give more direct on-chain advice for people who actually wanted to do things within their own wallet and stay with the core thesis of being self-sovereign.
I love that. And it's kind of interesting. We once had the Bitcoin futures, and now we have the spot ETF
Yeah.
from January, which are substantial changes.
Mhm.
Why do you think that more registered investment advisors aren't looking into this? Is it something that's happening behind the scenes, either with their firms? Is it this disparity between the broker model and the fiduciary model? Can you maybe
Yeah.
speak anecdotally about what you see within the industry and maybe some of the changes that you see coming?
Okay, that's fair. A great question. I believe that all of those things are taking place in some form. So you have to think of the model within a brokerage firm versus an RIA or even like a family office, or let's call it some form of institution. They're all maybe regulated a little bit differently. Some might be by the federal government, some might be by the state, some might be working with one large family, some might be working with all different types of families. So it is more involved. But if you sort of break it down, here's been the progression. If you are a family office structured in an RIA model and you have one client, you naturally have the ability to think bigger about the investments that you bring into a portfolio. Let it be timber or direct real estate or alternatives like hedge funds and even digital assets. They have the ability to be more nimble just by the nature of having one client and arguably even less bureaucracy and less layers to the business to be able to make quick and informed decisions. So I would argue the first ones to market typically are the family offices in some form, potentially even institutions, or think of like endowments and pensions, where for many years, some of the biggest endowments, they don't talk about it enough. Some of them have sort of talked more about it. They have had direct or indirect digital asset exposure, like through Bitcoin. It was just a very small ancillary piece of the pie. But they have had exposure. For the big brokerage models, think of, let's say, any brokerage house that's out there. You have many thousands of financial professionals. You have multiple layers at their corporate office in New York or wherever they're located, getting through each one of those layers and making sure that everything is buttoned up from a compliance standpoint and an acknowledgement and education standpoint is extremely, extremely slow. It's why some of the fund managers that are out there who have been in the crypto space for many years have spent a lot of their attention on just education, education, education. But all that being said, you are seeing even this year some of the larger brokerage houses getting access, and more of them are having those current internal conversations. You'll see more of them give advisors exposure throughout this year, and especially as we get into next year. But that's been happening because now it's easier to not only be able to trade the holding, but also to do it within a wrapper that is conducive for the business of TradFi, which are ETFs. Most of the models and ways that we approach our traditional side of our business is through ETFs because they are tax efficient, they are low cost, they are easy to rebalance within portfolios when you have multiple accounts. So point is, you will see more of that. And on the RIA side, I would say they are like us. Everyone is run a little bit differently. Some have brokerage affiliations, which might be complicated and a slower process. For us, we don't have a brokerage tie, which means that we are investment and also custodian agnostic, which means we can be nimble. We could be, for the right reasons, a little bit like a California startup, where we can be quick to want to make decisions or say what could be more efficient for a client experience, and then be able to run it through our compliance and our attorneys to be able to take action. RIAs, I think it's been naturally easier. I think more of them are having still those internal conversations. But even as I say that, no, it is an educational journey. You have demographic disparities within different RIAs, which you might have the 20-year-old who is more willing to say, let's look at this and be curious. The 60-year-old who is looking to retire from their practice and maybe is leading it in the overarching decision making might be discouraged to dive into something that they don't understand, right? People fear things that they don't understand. But I think as you have more younger partners on teams, you have these rising advisors, this will come up in more and more conversations because it's happening for more and more families. And now with ETFs putting more of this on the radar for really anyone to be able to have exposure to in a portfolio, that attention's been great.
I want to just double click into that real quick for viewers or listeners who don't know what an ETF is. It stands for Exchange Traded Fund. And so for the spots Bitcoin ETF, it means that the custodian of the fund, the issuer of the exchange traded fund, has to purchase the underlying asset according to the inflows, or conversely sell the asset according to outflows within the fund itself. Just to try to simplify that for folks real quick.
Yeah, no, I love that. And to lean into that a little further, so I don't get into the weeds on jargon. One of the most simplified ways to get access to any broader market, just in general, is through some form of fund structure. Most of what's existed for many decades has been mutual funds. You typically see that within your investment accounts. If it's an investment account with some average local firm, big brokerage house, like a Fidelity or a Schwab or some other firm, or the same thing applies if you're doing it through your 401k or your retirement account at work. The new kid on the block for well over the last decade plus has been ETFs, structured a little differently, but in a way to be, frankly, more efficient broadly. And that's been the biggest avenue for most advisors to get exposure for their clients in any portfolio. So being able to bring digital assets to the world within that mechanism literally spoke word for word for what financial professionals crave with getting access to anything.
Yeah, super amazing insights there. I think tracking that history of how TradFi has viewed digital assets, and really, I would say within the past couple of years, I've had friends now that are in brokerage houses talking about, oh yeah, we're looking into this, we're building in this space now, we're considering it for our clients. And I guess just this is more of a general question, but do you think the sort of tides are turning and sort of TradFi embracing the digital asset space and DeFi more is sort of mirroring what we're seeing on a national level or a policy level, whether it's the SEC or even political parties now supporting digital assets? What's your take on just sort of that momentum it seems like is building around the space, and as TradFi sort of embraces that, where do you see it going?
Yeah, I think the momentum's been incredible. You look at even the some of the recent conferences from the Bitcoin conference in, I believe it was in Nashville, and having a lot of political tones and even having individuals like former President Trump there, that was something I don't think people would have ever anticipated in previous years. And then amongst both parties, hearing more of a dialogue as I think everyone's realizing, the world of crypto is a force to be reckoned with, and it's not just the 20-year-old sitting in his underpants who is buying digital assets. These are people who live next door to a home that a mom and dad who are in their 40s, 50s, 60s, and even 70s owns. And I think as it's become more all-knowing that people of all walks of life have crypto in some form, to the tune of, even in the US, many millions of people. And we've seen how the last couple of elections have been really close. Look at 2016, look at 2020, literally came down to a couple of states. We're talking not millions of votes between who would win, but just tens of thousands, showing that every vote very much counts. So I also feel as though, from a political standpoint, it's the realization that there are going to be also single issue voters out there. And if someone can't make up their mind, they might just say, well, I love the space of crypto. I love what it stands for. I love what the vision is for the future. And I'm going to make my vote off of that, which could very much be the difference of swaying who wins, not only in the presidency, but also with the other branches. But
Totally agree.
For what you said, though, I think the momentum has been incredible. I wouldn't have anticipated this. And I believe that it could very well continue without trying to suggest who will win, because I don't think anyone knows. And I think it'll be difficult. I think truly it'll come down to the very end. But what's more important is what's going to happen within the House and the Senate. But arguably what's been typical is that is even divided. And that's been, with broad strokes, it's actually been a pretty good thing. It's everyone keeping each other in check. That's actually been better at times versus having a clean sweep on either direction. But I think it'll continue. I think at times the SEC has gotten a bad name. Democrats have at times gotten a bad name, partly because of some of the things that have played out the way that they have, and some of the things that have been suggested. And you're seeing how even some of that is potentially turning. So I think that momentum for the space broadly is great, irrespective of who may win. I think there will continue to be strides in the right direction, seeing as though we do not want to have this next iteration of the internet and potentially even the rails of our financial industry be driven by other countries around the world. The US would very much benefit, and they know that they will benefit from being able to be a powerhouse within that space. I'm optimistic that we'll continue to progress, very much like many of the countries from the Middle East to Asia to even Europe have moved arguably in the right direction to put rails where rails might be needed to protect consumers, but also allow us to have clarity on what can and cannot be done, as we're not trying to be rule breakers. And one of the biggest challenges of being an RIA is, how do I stay in line with following the rules when at times they've been a little bit opaque? That's challenging. And if you wonder why some of the adoption at times has been slower from traditional finance broadly, that is added to that. Give more clarity, you have more comfort.
Yeah, totally agree with you on regulatory clarity and just giving people rules to play by. We all want to do things the right way. I wanted to throw in just a quick.
Nothing wrong with rules.
Sorry.
I was just going to say, nothing wrong with rules. Truly, there's nothing wrong with rules. We need rules to be able to know what we can and cannot do. And that goes for, in a way, how certain aspects of society have been built, but then also for, like, especially financial services.
Yeah. And I think you bring up a good point too about who owns digital assets. Like, the latest numbers now are saying 93 million Americans own them. That's up from 70 million last year, which is remarkable increase. And I really find it so interesting how it's had this moment. And this is at, post FTX collapse. And I think a lot of bad press about crypto and a lot of, biases against folks who own it, when the technical challenges, as you said, people fear what they don't understand. And now we're seeing it come into the mainstream, and more people are adopting it. More and more traditional financial institutions are giving people access to it. The SEC, the regulatory framework's changing. It's fascinating to watch. And I really appreciate your thoughts on all that.
Yeah, of course.
Do you think that you mentioned talking about ETFs providing exposure within traditional financial vehicles or mechanisms? People
Mhm.
can invest in the Bitcoin spot ETFs now in Roth IRAs, 401ks, some of them, I suppose, traditional brokerage accounts. Do you think that that is the future for the way that digital assets will be transferred through traditional rails? Or do you think that there will still, or do you think that there will always be a market for on-chain activity and having custody over one's own assets?
Hmm, interesting. I believe that there will. Mm, great question. As of where I'm sitting right now, um, I believe that there will be a world where there's both sides of it, to where getting exposure for the reasons of having an ancillary asset that might be a way to have a different or differently correlated investment relative to the rest of someone's makeup within a portfolio, in addition to being able to take on a different layer of risk and to diversify broadly. I feel like you will see a good portion of that being done within an ETF model, because I think it's the simplest and it speaks to the professionals who are then giving advice to millions and millions of Americans. Um, so I don't see that going away anytime soon. I think that's going to be typical, and for most, that works. And also, as you've seen, the slow progression and education, and then getting everyone to get to the next chapter of the book, it takes a lot of time. Now, let's talk about like future progression. What do I see for the future? Without giving a timeline of when that future starts. But what I envision is a world where majority, if not all, of financial rails are on blockchain technology. There's plenty of efficiencies that are built from that. We have more efficiencies with settlement and transparency. And many of the biggest firms in the world are realizing that. They've been testing and testing and actually doing live transactions around the world to show that thesis, being able to, in 10 seconds, be able to move $1 billion overseas. That can't happen on the traditional rails. Blockchain technology allows that. So I do believe in a future where majority of our financial rails, maybe all of it in some future world, is on blockchain, and everything is being done in this new era of the internet's progression. And I would love to see a world where people can actually control their own assets, their own destiny, and be able to, in a way, control their fate. Um, it might sound ironic that I'm a financial professional from the traditional world, but I'm an advocate for not having things within the traditional model. I don't go figure, but it resonates with me even individually, where I love the ethos of the space, being able to be self-sovereign, in a way, be your own bank. It's beautiful. Um, and that's how it should be controlled. You should control your own assets. So I do believe in a world where things are done through those rails, and let it be within a wallet or an abstracted version of that that takes away all the pain points of um, the user experience as they look now. If you think about it, the way that we have to jump into our specific wallets, go through the signature mechanisms, and everything else that ties into doing things on different protocols, it's at times a little disjointed. It's a little complicated. Um, but I'm hopeful that with account abstraction and many of the things that are being built by projects as we speak, they'll take away a lot of that, to where even though we get excited about blockchain technology and the rails, and I'm fascinated by it, you won't hear as much about that. It will be happening underneath the hood, just like how the internet operates. But then you'll just go to the website. You'll go and be able to go on your way and do things with all of that underneath the hood. That's when the future is truly here. But that's being worked on. Um, and I look forward to a world where we can have that level of control over our own being, so to speak. And also this, we're a little delusioned here in the U.S. when we have a bank in every corner. Literally, I look across the street and there's a bank, right? If you go to most areas around the world, let it be in lesser developed Asia, you go to Africa, you go to certain areas of the Middle East, or Central America, South America, places where there are many more people than you have in the U.S. Billions and billions of people, the dominant part of the world population. They are not a part of society fully. They can't contribute the way that we do. They don't have a bank on every corner. Being able to have a digital device like a phone, which has become substantially more accessible, has allowed them to be a part of society. Looking at even what has happened in overseas countries and wars, digital assets have actually been at times a saving grace when your bank shuts down and you can't get access to your funds. So we've seen these countless examples where there is maybe more turmoil with governments or with currencies. And that has also resonated and hit at my core to where this is bigger than just a US conversation, bigger than just a us three conversation. This is something that has been beyond useful for many people who are trying to just have a life around the world. And it is arguably a better future if we can all get on this path. And in time, I think we will.
I think so too. And I kind of want to zoom in a little bit. We've been talking more from a higher point of view, industry as a whole. With the work that you do in advising clients, I feel like there's a whole segment of the crypto user population that purchases things without maybe understanding the risks involved. And you mentioned risk a few minutes ago. And I think I kind of boil down risk in maybe three categories. Custodial risk, just like we saw with FTX, they were custodying customers' funds. Whenever they collapsed, then those funds are largely gone. You have self-custody risk of you holding your own assets and being your own bank. And with that comes the requirement that you have great security posture, that you're guarding your public-private key pair. And then you also have token risk, where there are tens of thousands of tokens on the market today, dozens, if not hundreds of blockchains. And with that, we see a lot of people just buying these very small market cap tokens in hopes of being able to grow that into immense wealth in a very short amount of time. Two-part question here. What do you think about token risk? And how do you advise clients with that in determining what is right for them to purchase and to hold within their portfolio? And then secondly, whenever it comes to self-custody versus an ETF, what is your general recommendation? Is that based on your client's specific journey within digital assets and how comfortable they feel? How do you approach those two things?
Okay, yeah, a great question. So let's talk about it. So from a token risk standpoint, how do we advise? It is having a conversation in a holistic fashion. How do these specific tokens and what you have within your portfolio or what projects you're working on and how you're getting compensated, how does that fit into the broader spectrum of your life? Give you an example of some of the conversations we've had even more recently. It's someone who works for a specific project is getting token allotments. They're also getting paid within their wallet in USDC, so within a stable token. Think of like getting a DeFi's version of the dollar, so to speak. And they want to be able to buy a home. They want to be able to retire at some point. They have a child on the way and want to be able to set up that child for that future. And they have other aspirations from an entrepreneurial standpoint. That is holistic planning, being able to break down what's happening with priorities and goals and being able to say, how does this work into the overall plan? And then from there, starting to have the conversation about risk. How much of someone's assets, as an example, should be within digital assets, irrespective of what form, but how much should be in digital assets? How much should be in traditional finance assets? And then how much should also be in other things like real estate? Or think of any other investment that's out there. So we have that conversation broadly for each individual that is very personal. No one's getting the same advice because everyone's situation is so vastly different. And their risk or comfort level is very different. You will think naturally differently about risk if you're on your own versus if you have a spouse and a child. Naturally, your risk changes. Did for me when I started to have a family. So it depends on where you're at your stage of life. It also depends on potentially what chain projects are involved with. And then diving further into that specific token project, we have our own subcommittee internally where we have individuals who have designations involved with digital assets to where they understand digital assets. And then from there, we dive further into being able to have our own framework on how to assess tokens. Not all of that has to be replicated for every person that's out there, but I'll give some examples on what we've suggested to people when they're looking at specific tokens. It's looking at it from a fundamental standpoint. So maybe even using tools like maybe DeFi Llama or Token Terminal, which anyone out there can get access to in some form, at least some version of it, and being able to see things from the standpoint of earnings and revenue and arguably financial metrics that are warranted and give you a lot of optics on a project. So high level, that is an example of some of the things that we'll look into. From there, it's diving further into, have there been audits? How many? What has been uncovered? So looking at things related to code, looking at things tied to the overall community. So specifically, how many people are a part of the community? Has it been growing? Has there been a detraction in growth? What are some of the things that are being discussed within governance proposals? Are there bigger issues at play, or is there a unique evolution of the project? What is happening with the broader market? That could be more of an ecosystem conversation. Are you doing something with Hedera, or are you doing something with Polygon or with mainnet Ethereum? So really different conversations just by nature of those chains. You could see sort of how they even progress through this bull market. So being able to dive into that. From there, we talked a little bit already about like governance, but then also operationally, how buttoned up is the team? Are they all anonymous? Are they actually open about their bios? Anonymity was a unique thing at the onset of people getting into this space. Everyone was extremely anonymous. Some of that can be to a fault. If individuals and then even bigger institutions and bigger money is going to come into play, you have to have optics on who's a part of it. So operationally, how are they buttoned up? We look at different ways to grade that. There's different tools out there that allows us to, in a way, grade that on a scale by looking at each one of these different metrics, sort of giving it its own sort of score. But I would say looking at those different segments could be really helpful. It's a lot, but that's the right way to do it, in my opinion. It's also keeping it at times a little bit simpler and looking at projects based off of their size and their longevity. So if you're looking at decentralized exchanges that are out there, there's a very different conversation about a protocol that just came out the last 2 months, as an example, versus maybe Uniswap that has been here in essence from the beginning. So you could sort of put it into your mind the way that I see it from a traditional finance standpoint of large caps versus mid caps versus small caps, looking at the different capitalization or size of these companies and or protocols to give you a sense of another way to also assess risk. You will have more risk with a micro cap or a small US stock, naturally because of the size of that company versus, let's say, a large company like NVIDIA stock or Apple stock at the other extreme. So bringing some of those things from traditional finance and looking at them through the lens of DeFi and sort of the crypto ecosystem, I think could be really helpful. That's how we assess it. You asked a question about self-custody versus ETFs, and is it based on a client journey? The short answer is absolutely. Some people, sadly, don't care as much as I care about the ethos of the space. Some people simply prefer to have an asset that does the job of diversifying their portfolio and ideally over time appreciating. So for certain clients, an ETF will naturally be what makes sense. Maybe for most, that would make sense, at least within the framework of how the market is structured today. But for certain people, a part of that journey, irrespective of age, people who might be working on projects or people who have already been doing things through a centralized exchange or through their self-sovereign wallet on their phone or their ledger device, their hardware wallet, we will have a natural conversation with them about their needs and desires within this space and how much the ethos matters to them, but also the comfort level with their risk. Because it's a very different level of risk that you have to consider within that space versus doing it within an ETF on a public exchange. And for the individuals who are comfortable diving further, we will go down that path with them. And we want to support that. But I feel like, as you sort of alluded to, it's very much based off of each individual's journey.
I'm in full agreement with kind of the ethos. I like having assets that are outside of the traditional monetary system.
Mhm.
But even after the spot ETFs were approved, I moved some of my assets to an ETF just to limit my own risk exposure. That if something were to happen to a hardware wallet that I have at a bank or something like that, then I at least still have exposure to the asset in the long term. And it provides a little bit of peace of mind for me. And then Dan and I, just in our own journey of talking with people and building Coast, we've found people that are just all in on crypto. They have no exposure to equities. They only want self custody. And so I think it's very interesting to see different people's risk profiles and begin to understand the perceptions or the framework that they've built in their mind about how they see risk
Mhm.
because someone could see the traditional financial monetary system as a risk, and so they want to hold everything outside of that, um,
Absolutely.
or have some kind of blend of that as well.
Mhm. Oh, go ahead. I'm sorry.
Oh, and I was just going to say on the topic of tokenomics, I think that that is something that's largely gone undiscussed, where there are just massive token unlocks where the tokens are just continually being diluted.
Mhm.
And people don't think about dilution in the same way within crypto. Some of that is more transparent within traditional markets. And some of those things don't even occur within traditional markets. Whereas with cryptocurrencies, you could have a token and it could just be hyperinflationary and just raining tokens every week, unlocks to early investors. And so people are purchasing this thinking, oh, this is going to go to a dollar or something like that with no preconceived notion as to why. But it will
Mhm.
never, ever reach that point because the inflation or the pressure of unlocks is just far outweighing the demand or inflows to that asset.
It is part of, without referencing specific tokens, it's part of the reason for why I might be a user of specific chains, let's just say broadly, but I may never be a purchaser of their specific token. And it's partly because of that issue that is less understood as it relates to dilution, but is happening with a multitude of projects. And showing you the flip side, like we're having conversations with individuals who are in the situation of receiving some of those unlocks, which is extremely complicated from a tax standpoint, and then also a risk conversation. Um, and I'm very much in agreement with you on, as people go through this personal journey, we have seen people as well who find more risks with sort of the traditional infrastructure and system versus being self-sovereign. But for everyone that I see that way, it's completely the opposite somewhere else. And an ironic twist, I would say, in most situations, it's um, it's seeing individuals who want to offset their risk in some way, to where even for the crypto natives, it might be doing stable tokens as their form of risk mitigation. And even that is its own journey because of the range of stable tokens that actually exists out there. USDC gets a lot of attention, but there's a plethora of them that exists. Um, so I'm with you. It is complicated, which is why, arguably, I think we're having this conversation. But it's also why there is a need for more fiduciaries to raise their hand and actually support individuals who are in this space. Most people are not going through that pronged approach that I highlighted with looking at these different aspects of tokens or projects. That's a problem. Other people are signing things unintentionally. Unless you are completely entrenched in the weeds and you understand code indefinitely, which not everyone does, um, half of the time people don't even know what they're actually clicking on. That's a huge issue. Um, but we're here to support people along that journey and lead in with education.
Really, really fascinating discussion here. Wanted to ask if you have any tips about what crypto owners should be considering when they're buying crypto as part of their portfolio. This can be as nuanced or as high level as you think makes sense.
You're saying what crypto owners should be considering?
Correct. Yeah. When they're trying to diversify their portfolio, what should they be considering if they're looking at crypto tokens?
Okay. Well, some of it we sort of alluded to, right? But it's having a conversation with a professional or on their own, being able to ask themselves, what are the priorities and goals that they have? What are the timelines or time frames for those specific goals? Is it a month? Is it 6 months? Is it a year? Is it 10 years? So I think it's some of the things we mentioned earlier, but everyone has goals, everyone has priorities in life. So being able to go through that sort of with pen and paper, and then from there, being able to ask themselves, what is the purpose of digital assets within their portfolio? So again, for certain people, most of the advisor world will be at some point suggesting digital assets to their clients, but it's to have it as an ancillary sleeve of a portfolio for diversification purposes. As you've heard before, maybe the 1 or 2 or 3 or 5% sleeve of a portfolio. That is the initial onset progression for a financial advisor and what they're suggesting to clients. So what individuals have to ask themselves is, are they seeing it for that purpose? Or are they seeing it as a way to build up the majority of their wealth? And to give you a sense of how I look at it, because I don't know if I was being as direct about how I personally look at it, I believe that there's risks in anything that we do. But having all of your funds in digital assets, I think, is wrong. Having all of your assets in financial markets, I think, is wrong in traditional methods. And I think having all of your assets in your business and or real estate is also wrong. You see the point, though, right? There's a flaw with having too much concentrated risk that never ends well. And we have plenty of business owners that I can tell you we have diversified away from their businesses over time strategically. For crypto natives, we have done a job of diversifying away from some of that strategically. And the same thing for traditional finance. We diversify away from that strategically. Let it be in real estate or people doing rentals or doing franchises or whatever they're doing on specific chains within crypto. But I believe that taking a diversified stance to this makes the most sense. But you can see where it's several different things that really have to be considered in some form. But even for the individual, I would say, who is completely self-sovereign and wants to be off the grid and do everything within their wallets, there's a need for those individuals to offset some of those risks. And it can still be done within those mechanisms, but looking at things like maybe stables or LPs or being really particular to specific chains that have lesser risk than other chains. But it's about, in a way, bringing an adult in the room to make sure that you have someone to bounce ideas off of, brainstorm, and think strategically so no one gets in their own head. And to not have me make a final decision for any client, because that's not the intent of a consultant. An advisor is there to advise and give suggestions and feedback and ideas that someone should be considering, and then for someone to ultimately make that decision. Irrespective of which decision they make it in a more informed way.
Yeah, love all those tips and perspectives. I think, diversification, critical, and like you said, seeking advice when it makes sense. I think that's really important for everyone to remember.
Yeah.
Eric, this has been super insightful. We could speak for hours and hours at length about all of the nuances within digital assets, but we do want to be conscious of time. And so I believe that this is probably a good natural wrapping point. Before we head off, though, do you have any plugs or promos? Where can people find you? How do people get connected to you directly?
Yeah, I appreciate that. This was fun. Do this as often as you guys want. This was exciting, and there is so much to unpack to where I could spend hours with you too.
We'll do a part 2, part 3,
yeah,
part 4.
I'm ready 3 or 4, 10, and I'm here. I'm here to do it. That being said, our website is www.verdecm.com. So Verde Capital Management is our firm, and that's the most direct way to get access to us broadly. Finding me, a couple methods. It's via email. It's Eric, E-R-I-C, Eric at verdecm.com. Or also you can find me on Twitter. I'm at digitized_Eric with a noun profile, and also my 0xfiduciary.eth. So those are the best methods. And if anyone has questions or just curiosity or needs someone to run ideas by, this is really what we're here for. This is still very early innings as we see this industry progress. And well, we're here to unpack the rabbit hole. Whoever is curious.
Incredible. Thank you once again, Eric. We appreciate you being here. And that's a wrap for episode 3.